What's up, Fomo fam? Happy Sunday. Today I would like to take a look at some exclusive charts and indicators that you cannot basically find anywhere else. I paid for this and I want to share it with you because there is a lot of information that can provide us with a lot of good statistics about the potential Bitcoin bottom, where we are right now, what we can expect in the coming weeks, months, years. I think this is super useful. So with that being said, welcome to the Fomo Factory. If you haven't subscribed to the channel, please, just smash that like button, subscribe to the channel. There's a bell notification, by the way, so you never miss any video of mine. Today's Sunday. I'm shooting this video a little on forehand because this weekend I'm actually on a holiday. This is for the longer term outlook. By the way, I started a Dutch channel for all the Dutch people because guess what? I'm Dutch. Links in the description if you think that's interesting, so go check that out. For now, I would like to take a look at Into the Cryptoverse made by Benjamin Cohen. And he has built this platform that you can use if you pay, I don't know, around $100, $150 a month, which is quite a lot of money, especially for the average investor. Although I think this is a great platform to use for my content as well. So I'm happy to pay for it and share this information with you guys as well. I don't have anything specific right here that I want to show you, but I want to go over some things that are looking pretty interesting. First of all, this is what I showed you in one of my last videos, so I'm not going to spend too much time on this. But this is the total indicator dashboard. And the total indicator dashboard, blue line is the Bitcoin price, the red line is the total risk based on all indicators. So price indicators, all kind of price indicators, social metrics, on-chain data. The lower this is, the closer we are usually to the bottom. In previous bear markets, you see that that indicator was around 0.03. Here it was sitting at 0.01. In this last bear market, it was sitting at around 0.01 again. And now we are sitting at 0.1. So we are far from that. It's mainly because of the social risk. If we turn that off, you'll see that we are going a lot lower. It's mainly because people are still watching YouTube videos, subscribing to YouTube channels, following people on Twitter. You can see it right here. Twitter accounts layer 1s follow. So people are not going away, it seems. Of course they're going away if you just put in the social, metric. Combined, sorry, I'm a bit sick. Combined with the last bull run, yeah, we're sitting a lot lower. But we're still quite high. We're still quite high. So people are learning that crypto isn't going anywhere. Now, let's go to the dashboard. Let's take a look at the charts to just see what we can find right here. So I'm very short of breath. So if I do, it's like, I don't know. There are a couple of charts here that I find quite interesting. This is one that I talked about a lot. Crypto market and the trend line. As you can see right here, we are under the fair value. So this is the entire crypto market, right? If we take a look right here, the fair value is sitting at around $1.8 trillion. We are currently sitting at 800 billion. So we're more than twice as low than that. Can we get lower? Definitely. That's always possible. We have not made it to the bottom side of this range yet, this green bottom line, right? Usually in a bear market, we get at least pretty close to that and we stay there for a long while. Here as well, COVID crash, I think it was. Yeah, we didn't touch it, but we went very close at least. Now, of course, we are getting close, but we're just getting there, right? So we are now finally sitting in the area. We are sitting in the area where things are bottoming out, but it doesn't mean that we cannot get a big ass wick to the downside or anything like that. So keep that in mind. Also, I would like to show you this. This is the ROI after a cycle peak, and the green line is where we are right now. Let me remove this one. The red line was the bear market in 2015, and the orange line was the last bear market. As you can see, this bear market takes longer than the last bear market and almost just as long as the 2015 bear market. So this is almost the longest bear market so far. Does that mean that we are close to a bottom? Not necessarily, because you see where we are sitting when it comes to the ROI. We are still sitting way higher than the red line and the orange line. So that's the other two bear markets. So we're sitting way higher than that. So although it takes longer, we have to go down more if we want to get to the average, right? So yeah, about timing, we are in, that's what I tweeted as well. I tweeted bottom season. Like, this is bottom season. Usually we bottom December, January, November. So we're right on track. But when it comes to price, we still have to get a lot lower before we actually bottom, if we want to do the same as the previous bear markets, right? I'm not saying we will. What else is there? Quite interesting. Yeah, quite interesting. This is, the red line is the Bitcoin dominance, right? If you pull up TradingView, you see the Bitcoin dominance sitting quite low, right? Sitting at 40.3%. That's really low, all right? Which usually means that if this goes up, Bitcoin hopefully has a run, but altcoins will, you know, not do so great. There's a lot of room for altcoins to come down. So it looks like we are sitting at the bottom, but the problem is this is including stable coins. This dashboard, however, here you can exclude stable shit. Here you can exclude stable coins, and look what happens to the red line if I exclude them. It's a lot higher, right? Because now we're sitting at 45%. So that's already a lot higher. When it comes to the dominance, we are making, we had a low, we had a slightly higher low, and now we're, you know, also sitting at a higher low. So more money is flowing into Bitcoin instead of altcoins. So just some food for thought right there. What else is there? What else is there? What else is there? Yeah, we have the moving average, right? And this is just something you want to know. This is the 200 weekly moving average. And we were always holding that as support. We went under it a couple of times with a short, you know, short wick, as we did right here. We came above it like in a day or two, right? And here as well, the COVID crash, we stayed under it a little while and we went above it again. Yeah, this time when it comes to that, we already under it for like half a year almost. So that's a little different, right? So that's something to keep in mind. However, if we turn that off and we go, for example, to the 300 weekly moving average, we see that we are just under the 300 weekly moving average now as well. So you can see these different moving averages, right? The 350 moving average, we are holding that as support right now though, right? So might it be because, like, if we take a look, for example, at the 100 weekly moving average, there was also support right here, but we went under it, we went under it, we went under it, right? So we always went under that, right? At a certain point, we had the 150 weekly moving average. We hold that better as a support, right? That's 50. This was a better support, but we also came under that. Now, the 200 weekly moving average, like I said, we just came under that. Will it just be that these moving averages, that we will find new moving averages as support? That now, for example, the 350 moving average is our new support? Could definitely be, or the 400. In that case, if we have to go down to the 400 weekly moving average, it's around 14K, right? So would be pretty, yeah, that could definitely be the case, that's our new support right now. So that's something to keep in consideration. This is quite interesting. This is the Bitcoin percentage of supply in profit and loss. And this is what Benjamin talked about a lot, and which I find very interesting. In every single bear market, they cross right around the bottom. All right, now this looks like a mess, but if you put the moving average on the 7 days, for example, you have a better overview, right? So here, and let me even remove the Bitcoin price. Here, they crossed, right? Here they crossed as well, this bear market. Here they crossed, COVID crash cross, and now here we had a cross. All right, so that cross is in. If we put it at the 14 50-day moving average. We had the cross right here, this bear market. We had the cross here in this bear market. We had the cross in this bear market. And now we just had the cross like two weeks ago. If we take a look at the 30-day simple moving average, this is an interesting one. Because if we take a look at the Bitcoin price, where did it bottom? Right here, right at the cross, right? Where did Bitcoin bottom? Right here. Here as well, right after the cross. Where did we bottom here? That was here. Let me take a real quick look. With the cross, we bottomed right after the cross again. Now we are about to cross, but it didn't happen yet, right? It looked like we are about to cross right here, by the way, and it didn't. So maybe it won't. But it's getting close. Usually we bottom after that cross. So buckle up. Right, and now if we take a look at the 50 moving average right here, another story. We had a slight cross right here in this bear market. We had an obvious cross here in this bear market. We had an obvious cross right here in this bear market, and the cross here is, yeah, not really even close yet, right? That's a bottom indicator that shows that, you know, that's what Benjamin says as well, like, usually after every cycle, this has to cross. Otherwise, the bottom was just not in. It didn't cross yet. So according to this indicator, bottom is simply not in. If we look at the 90 moving average, well, here it didn't even cross though. So I don't know if we really should take a look at this one. I think though that the 30 and the 50-day moving average are very important to keep in mind. They, from what I see, should cross. Logarithmic, I always pronounce that wrong, regression band. All right, I talked about this quite a lot as well. Bitcoin is always in the lower band, in the green band, right? In every bear market, we go there, we stay there for a while. But it doesn't mean that Bitcoin doesn't go up in the meantime, because the band is moving up, right? Here, when we entered the band, let me reference the upper line of this band. So this upper green line, right? The upper green line was sitting at $2 right here, right? We were here for a long time, but once we came out of it, the upper green line was sitting at $23. So that's 10 times as high, right? In this bear market, we entered right here when the upper line was sitting at $230. We were still there. That was the 12th of January. We were still there the 17th of May, 2017. That's 2.5 years later. We were still there. We were here 2.5 years. But once we entered, it was $230. Once we came out of it, it was $1,700, right? And that's when even the bull run really starts. So although this is, you know, you could see this as an accumulation phase, as an oversold territory, it's still going up. And still the parabolic move has to follow. Here as well, 2018 bear market. Once we entered, 5K. Once we came out of it, 16K. Now, we entered this right here at 34K. It depends on when we come out of it. Will it maybe take 2 years again? Could definitely be. We entered it 10th of May, 2022. Let's say we will leave this in May 2024, right? Where would that take us? The upper band, 83K, right? And if it takes 2.5 years, so let's say the end of 2024, it will put us at 110K, give or take. And that's this area. That's not the upper area where we also almost always go to, right? Bull market, very close to it. This bull market, we were there. This bull market, we were there. Last bull market, we were there. Kinda, right? So even if we come close at the end of 2025, where would it take us? 300K, 450K, somewhere between there, right? So long term, it's cool. Ethereum, however, still has a long way to go. Ethereum is not even there yet, right? Ethereum hasn't even touched it yet. So Ethereum still has a long way to go. If Ethereum is about to enter this area, right? Today, for example, the upper line would be around 1K, the midline around $700, and the lower line around $500. Depends on when we enter, though. Could be that we enter in half a year, maybe in May 2023. Then it's 1.2K, 840, and 580. Right, so it really depends on when we do that, right? But these are all important things to keep your eyes on. Now, there are some bottom indicators as well. This is the total crypto valuation versus trend line. What is it? This chart shows the percentage difference from the fair value logarithmic regression line of the total cryptocurrency market capitalization. You know what I mean? The fair value logarithmic regression line has been set to 100%. Therefore, a 42% difference from the fair value line corresponds to a value of 142% of this chart. Right now, every time in the bear markets, look, the fair value is 100%, right? In this bear market right here, the fair valuation was sitting at 35%, which is pretty low. In this bear market, it was sitting at around 38%. In this bear market, it was sitting at 37%. So, you know, 37, give or take, is the average. We are now sitting at 45%. So we still have a pretty decent amount to come down before we are sitting that far from the fair value, which marks the bottom so far, right? That's this level, give or take. It looks like, it's just 10%. 10% is quite a lot. 10% is quite a lot, right? You can apply moving averages over this as well. There's so much to do here. I love this place. Right. What else is a good bottom indicator? So these are the bottom indicators, right? And you want all the bottom indicators to basically flash, right? That's what you want. We also have the pi cycle bottom and top indicator. The only thing is that the pi cycle bottom indicator this year was not that accurate, right? It's just not, it was not accurate. Like the tops, the pi cycle tops, these vertical lines, right? It marks the top right here, perfect. It marks the top right here, perfect. It marks the top right here, perfect. But the 2021 bull was so much different because everything pointed out that April was the top. Every indicator, the only thing that pointed out that this November was the top was the price itself, right? But also the pi cycle bottom top indicator went off in April, right? So that was way off, right? So if we cannot trust the top signals of the previous bull market, and how far can we trust the bottom signals of this bear market? Right? Because if we look at the bottom indicators right now, because this was wrong, right? This was just wrong. When it comes to price, it was wrong. If we look at the bottom indicators, we had the bottom indicator right here. Accurate. We had the bottom indicator right here in 2018. Accurate. But we had the bottom here in July. It was not accurate, right? I mean, the top indicator went off in April, and we had the top in November, right? April, May, June, July, August, September, October, November, right? So that's 7 months difference. If the bottom indicator is maybe also wrong by 7 months, and we had that going off in July, at 7 months, where would it take us? January, I think, like July, August, September, October, November, December, January, February, right? So it doesn't predict it, probably, but when it comes to that, it will be understandable if we see the major final bottom in February. Could be. Could definitely be. I love all these indicators, combining them. You can even, you have a workbench right here. You can even make your own indicator. I can add a metric right here. So it's about Bitcoin. I want to add the, well, we have the price. I want to add the fair value to it. So let's add that. This is the fair value. Let's add another metric right here. We have the, let me check out macro, crypto. The RSI, we can add that. You can combine so much stuff right here. I can even add formulas right here, right? So I love this. I'm going to use this a lot. Because I think there is a lot of useful information to get out of this. We have also golden and deft crosses. I don't really, I don't use that a lot. I don't really, you know, I don't know. I just don't do that. Then we have the running ROI. Kind of talked about that already, right? The ROI is still sitting quite high compared to other bear markets, and I don't know. I just want this to come down a little bit more, right? And if we take a look, does the Bitcoin price necessarily have to come down for the ROI to come down as well? No, I mean, it's 365 daily running ROI, so it has every day it has another reference point, basically, right? So this could really change a lot. If Bitcoin stays the same for 2 months, for some reason, the ROI will still change, right? Because now it won't reference 1 year ago from today, but a year ago from, well, that moment, and it will be completely different. All I know is, like I said, I'm going to use this dashboard a lot to make my content right here on this channel. I think there's a lot of useful information to get out of this. And I just love this one. This is the bear market comparison. And the 2011 bear market was like completely different, of course, were other times. But, you know, even if like, and that's quite funny, right? Like I said, the price, yes, we topped out in November. But everything points out that April was the top. Every indicator said that that was the top. And if you sold there, you would have been fine. It was like 64,000 instead of 69. Well, right? But we can also use this. So this green line is we right now. And this right here, this was the top. So this was in November. But we can also say like, okay, but what if the top was in April? This is where we are, right? In that case, we like, you know, for now it doesn't really make a difference, because then you can say, well, this bear market just takes way longer, right? But we still haven't lost a lot of money like we did in the previous 2 bear markets, right? Therefore, this needs to come down, right? And so let's put it on November. Right, and like I said in other videos, like how much do we have to come down for this to be equal? Well, I showed you in other videos how much that would be, but that will put us somewhere around $12,000, $12,000. That will put this around this level right here, right? And if we take this 3 months out, so this was the bottom of this bear market, and this was the bottom of that bear market. If we take it 3 months from there, what happened? Not a lot. So guys, even if we do bottom out, it's not that shit, now we have the bottom, now I must buy, otherwise I'm missing out. Yeah, you probably miss out on a little, but look at these previous bear markets. Well, yeah, we bottomed, look, again, we bottomed out right here, right? 14th of December. But if we take it to the 14th of December, which was here, what happened? Well, not really a lot. We went up, yeah, but we went down again, and we went a lot of sideways. We never saw this bottom again, but we were so close, and we were sideways for a long time, right? With this red line, this 2015 bear market as well. That was a quick wick to the upside. But if you put it in perspective and you take it to the peak, what is missing out on this little part right here, right? If you know that this is the move that comes after that. This is for Bitcoin. You can also do this for Ethereum, right? And if we take it from to the bottom, right? And first peak. Ethereum is like also taking longer, but it is like far from its low. And I don't think we will get there though. I don't think Ethereum is going to be that bad as it was. But we can also do this for XRP, for example, right? This bear market for XRP, for example, in 2020 took more than 2 years, right? And this was a really, really, really slow bleed. Really slow bleed. And the ROI was 0.05. That means in percentages from its all-time high. So let's do the very quick math, very easy math. Let's say, and it wasn't, I know, but for the math, that XRP at the top was $1. It means XRP here was 5 cents. So if it was $3, XRP was 15 cents, right? It came down so much, but it took so long. It was so depressing, right? And this is reflecting a lot of altcoins, right? If we look at Cardano, look at this. And did I say this? Yeah. If we look at Cardano in 2020 is the blue line. Slow bleed, ROI 0.02 was even worse than XRP, right? We are now here. If we compare this bear market to the previous bear market for Cardano, and if we are going to do the same, which we are not, but if we are going to do the same, we still have another year to go like we did last year. Mainly going down and sideways. Fucking depressing. Boring. Not fun. Not a good time to buy. And not a good time to get your hopes up. If we look at Litecoin, this is a different story. Litecoin takes... The bear market for Litecoin now takes way longer. Like peak 3. Now, orange. Takes way longer. The Litecoin bear market has been going on for 572 days already. The longest bear market so far was 13 days. And the one before that, less than a year. But still, we came down way more. A lot of things do point out that this bear market is more of a slow bleed than a quick wick to the downside. And although a quick wick to the downside is very painful, this is so depressing. That slow bleed is so depressing, right? Because also you just don't know, like, when is it going to stop? How low do we go? Like, if you have been dollar costing in altcoins, you would have been down for the complete year so far. So that's also not a great choice. Like Total Tree, look at this. 2020. This is where 2021, November, where it topped out. This is basically complete 2020. Look where we are. If you would have bought altcoins, but also this goes for the total market, by the way. This is the total market, right? Including Bitcoin and Ethereum. It doesn't matter where you bought. You are in loss, right? Unless you just bought this dip and you are in a little profit for a short while. But, well, woo, you are in a loss. So buying crypto this year just turned out not to be a good idea. Very simple. Very simple. So patience is key. Patience is a very big key this year. Like Benjamin says as well, cash is king. I wish I knew that sooner. I really started to realize that somewhere around here, though. I bought a lot of dips. I caught a lot of falling knives. In the big scheme of things, once we go up again, it will be okay. But in the meantime, it's just throwing your money away. You could have saved all that money and even buy now. And you would have so much more. So that's just my general take on it. Not saying like it's good, it's bad, we're going up, we're going down. That's not what this video is for. I just want to show you some indicators that you may have no access to. If you like that, I would first say subscribe to Benjamin's channel, right? This is his stuff. But, you know, I'm maybe explaining it in a different way or anything like that, right? So subscribe to this channel as well. If you like the content, you know what to do. Like the video, leave a comment, and I'll see you guys tomorrow. Bye.